Yesterday, after Tesla's earnings call, I made a video titled Mega Pain Coming for Tesla Stock, and that is exactly what we ended up getting for today. However, as I often share, there are always opportunities lurking in the markets. For example, before the market opened, I told the Push and Profit private group that I will be watching for Apple stock and looking to short the shares or get 175 or the 177.5 puts once the price is greater than 177.45, as there was a lot of bearish activity on the options flow for Apple. And when we take a look at Apple stock, we see that Apple stock did get rejected around that area on 3 separate occasions for today. In fact, at 10:11 a.m. today, I shared that I was watching Apple from the daily briefing call out, as that was the area where I initially saw that trade actually happening. And so if you guys want access to my daily briefings, where every single morning I talk about what's going on with the overall markets, as well as share my trade ideas, what stocks I'm looking to trade, and exactly the reasoning behind them, make sure to check out the first link in the description of this video. But with that said, I want us to kind of pay attention to what we heard from a fellow YouTuber and fund manager, Meet Kevin Paffrath, say on mainstream media about the earnings call that we had with Elon Musk yesterday.
Let's bring in Kevin Paffrath, financial analyst and YouTuber. Meet Kevin. Good to see you, Kevin. So, as
Thanks
a
so much for
Tesla
having
investor, you're so welcome. I know this was not the earnings call that people were expecting. I mean, we're used to the kind of Musk that we see on X, who sort of dips into everything, but this was an earnings call. What were your big takeaways from this?
Oh my gosh, this was terrible. I feel bad for him. Look, he's got a lot of things going on, legal battles, custody battles for his kids now, but it doesn't justify acting like Trump on Twitter, stonewalling the SEC or the European Union, and quite frankly, turning into a little baby on the earnings call. I mean, he was almost in tears. It showed a complete lack of leadership. Tesla's a leadership-less company right now, and it's terrible. That's why their CFO just left, I believe, as well. And this is a slap in the face to everyone. It's not just the shareholders, but it's a slap in the face to the other managers who are still there and the over 100,000 employees at Tesla. For a leader to cry about the economy rather than funneling that and coming up with a plan is pathetic. See, he's slow-walking his plans to build the Mexico Gigafactory because he's worried about the economy. He's afraid, but he should channel that. And he should instead negotiate with the Mexican government, provide a clear formula. Rates go up, prices come down. It's not that hard. But Tesla still has industry-leading margins, over 16.3% going to gross profit. Out of every $100 they make, $16.30 go into gross profit, beating every other American EV manufacturer and even a legacy auto manufacturer. They have so much going for them, but they should provide a clear formula. They should advertise to higher income areas, and they should provide a clear path for margin expectations. We got none of that. We got a leaderless Elon Musk who was afraid to be on an earnings call, who sounded beat down and like somebody who's basically leading Tesla into a directionless path forward. It's disgusting.
Well, Kevin, regardless of how you interpret Elon Musk's comments, we are seeing that reverberate throughout the EV sector. You look at where shares are among Tesla's competitors, all down, partly because of what we heard from Elon Musk saying that higher rates are sapping demand. Is that the whole story here?
Well, yeah. I mean, look, it's obvious that when rates go up, car prices become less affordable. It's the same thing for home prices. There are less buyers. Now, when it comes to homes, there are also less sellers, so you have a little less fluctuation. But in vehicles, everybody's producing more. So of course this is normal. But Tesla should be playing its strengths here. Tesla's strengths are out of everyone who's in this hard economy. Tesla is still generating massive profit per vehicle, massive free cash flow, the only pure play EV in America to actually be generating this cash flow. There's so much potential. They're so close on autonomy. They're so close on a revolutionary new vehicle, the Cybertruck, which is an exoskeleton rather than an internal skeleton for a vehicle. These are great products, and the people at Tesla should be cheered for this. But we need to know the lights at the end of the tunnel rather than hearing a complaining CEO who's not actually providing that path. This makes people nervous and scared. It makes people want to quit
Kevin,
Tesla
if we
and
look
not
at
be part of that.
If we look at the sector as a whole, though, I mean, the declines we're seeing today, not in Tesla, but in the names like Rivian, Lucid. I mean, they all have their individual stories, but is that warranted when you consider the higher rates may be sapping demand right now? But I guess the question to you is, does that long-term play for EV demand, does that remain intact still?
Oh, absolutely. 100%. Look, like long term, 5-10 years down the road, everybody's going to want an electric vehicle. The range won't be an issue. There'll be charging stations everywhere. You'll be able to charge faster. Then you can fill up your tank of gas. These cars are much safer. They're much less likely to catch fire. They're much less likely to roll over. You don't have fuel in the back of your car in the gas tank. These vehicles are phenomenal. The acceleration's better. The handling's better. Everything about electric vehicles is better. Problem is, you have, Elon acting like Trump on Twitter, and he's really frankly upsetting a lot of people. There are a lot of, especially women, which is another demographic Elon should be playing towards, upset and who would never touch a Tesla vehicle. So I'm very frustrated with Elon, but long term, EVs will be dominant. ICE cars will go away. That is very clear. That long-term trajectory stays intact.
And Kevin, I want to ask you about delivery numbers, because one of the things that we're expecting potentially is for more price cuts because Tesla's feeling pressure to meet those delivery numbers. But I want to talk about the game changer that's supposed to be the Cybertruck. I want to play you this soundbite from the earnings call from Musk.
We dug our own grave with Cybertruck. It is going to require immense work to reach volume production and be cash flow positive at a price that people can afford. It will take, I don't know, a year to 18 months before it is a significant positive cash flow contributor.
So if they've dug their own grave with the Cybertruck, what are the expectations? Where does Tesla go from here in terms of the next leg up in terms of growth?
Really, I'm shocked that he would say something like this. The Cybertruck, and he mentioned it in another part of the earnings call as well, the Cybertruck could be the leading source of cash flow for Tesla in the future. But of course, when you ramp a new product, it's going to burn money at first. Of course, when you have a new innovative product that nobody's created before, that you have to create the systems for, the new parts for, whatever, of course it's going to be expensive at first. But a way to phrase this much better would be, look, we are the only pure play EV in North America that is actually profitable on the cars we sell. We're going to reinvest that profit into making what could be the greatest vehicle ever manufactured, the Cybertruck. And in 18 to 24 months, we think that is going to drive the greatest cash flow we've ever seen at Tesla, greater than anything we've ever seen before. That's the leadership we need, because what does that do? It motivates shareholders to support Tesla. Tesla doesn't have as much cash as people think. They're like, oh, they have $26 billion of cash. Yeah, well, they got a pile of $23.5 billion of bills on their desk. They just had to borrow $2 billion more just to stay afloat. They don't have as much cash as people think. So the cash flow matters. And we need that vision that what we're reinvesting for is actually going to be worth it in the future. Otherwise, if I'm a Tesla employee working on the Cybertruck, I listen to that earnings call, I'm like, screw this. Why would I work for this company? Why would I work and spend my efforts on this car if even our leaders like, oh, we're digging our own grave? It is a stupid thing to say. This was a disgusting earnings call. Elon should be banned from the earnings call. Quite frankly, he should just be an outside consultant, because all he's doing now is he's blocking people on Twitter who are criticizing him, and it's disgusting.
Tell us how you really feel, Kevin. Kevin Paffrath with a mouthful here on Tesla, financial analyst and YouTuber. Meet Kevin. Good to have you on. We'll have to dedicate an hour next time.
Now, that was an interesting clip with Meet Kevin Paffrath, as a lot of the stuff that he has mentioned are things that I actually stand behind and agree, although I do believe he was a little too stern with his idea of what he said for Elon Musk, basically calling him like a weenie baby, crybaby. I think that was a little too much. I don't know. Maybe we should all feel like that as shareholders, as obviously Tesla stock is going down. However, one thing that we want to kind of understand is that maybe this isn't really how he 100% truly feels, and it might just kind of be kind of amplified while he's just on this mainstream network on Yahoo Finance, I believe it was. Simply because one thing you have to understand is that when you're a talking head or a fund manager going on these networks, you kind of have to say something controversial. This way, obviously, the ratings do good for those networks, but also because you're more likely to get invited again. As you guys heard, they're saying, oh yeah, we got to get you back on here for an hour, because him coming out very stern is pretty controversial, calling Elon Musk a weenie baby, although he is addressing that, yeah, Elon Musk has had some bad situations with a lot of the lawsuits and, of course, what he's going through with his personal life. But I kind of want us to understand that maybe, although I did think he came in a little too strong, he's kind of doing this because it's more likely to get him back on, TV, on the mainstream media, and him being a fund manager. One thing you have to understand is these fund managers will do this way that they could get invited once again, because once they're I keep saying again, once they're on mainstream media, it kind of is like advertising for their fund, right? If you don't know who Meet Kevin is, you're going to look him up, you're going to see, oh, he has an ETF that's actively traded. You could go ahead and invest your money in there. Kind of like how we always see Kathy Wood on these networks, or Gary Black, right? It's kind of like a slot for these talking heads to kind of get what they're trying to say. They're going to amplify some of their message, but you got to take it with a grain of salt. Again, I don't know if that's truly how Kevin feels, but I do stand behind it, especially when he mentioned some of the fundamentals for Tesla. See, I think a lot of people just look at the basic numbers, and I'm kind of glad that Kevin did pull something out there, and I actually agree with what he's saying with the Cybertrucks. Elon Musk shouldn't have said things the way that he had in that earnings call, and I believe that he should have probably phrased things a lot better, like how Kevin mentioned that he should have said it. But at the end of the day, it's just an earnings call that we've heard Elon Musk kind of more on a down day. We have to take Elon Musk with the good and the bad. And so as a long-term investor for Tesla, I'm honestly not too concerned about how Elon Musk was feeling for the day and how he did have a bad earnings call. Again, it kind of sucks, but long term, I'm still optimistic for Tesla, just as Meet Kevin is as well. But with that said, I want us to go ahead and hop into my laptops. This way we could go ahead and take like a technical perspective as well, and take a look at what's going on with Tesla stock, as well as just cover some additional topics. Alrighty, so we are officially in my laptop taking a look at Tesla stock from a daily time frame, and just from looking at this right now, you guys can see that it is a ugly picture. Now, one thing I do want to highlight is that when we're looking at the volume profile, something I've often said many times on this channel is that there's very little volume relative to price over here, versus when we were at around these levels over here where there was a lot of volume relative to price. Again, volume relative to price is completely different from your traditional volume relative to time. And so when there's little volume relative to price and there's selling pressure, that creates a disaster, which is something I've highlighted in yesterday's video. Now, we did see a little bit of a wick over here showing that there were some buyers kind of stepping in, and we're going to want to monitor that, because I said that this was going to be an area that we were going to watch, because we saw that actually be an area where the buyers stepped in last time Tesla had their earnings and fell down, right? It was a previous resistance in the past, a multitude of different times, and so that's going to be an area that we definitely want to watch out for. Now, I do want to talk a little bit more about the technicals, but I want to highlight some other things going on with the markets that had a huge impact. So let's go ahead and take a look at the Tesla stock, but let's look at it from a 5-minute view. Of course, we saw it fall down, but let's look at SPY. We saw the overall S&P 500 fall down as well, and of course, there were many catalyst events that caused SPY to fall down. One of the things I do want to highlight is at 2:48, I shared with the Push and Profit private group. I was a few minutes late, but there was breaking news that a U.S. Navy warship in the Middle East has intercepted several missiles, and an official states that the missiles were launched by, I can't pronounce this, so I'm not going to say it, militants supported by Iran. Kind of explains that, hard dip that we ended up getting, and the hard dip, I'm saying this area right over here. And so I went on to say that for clarity, an incident like this would likely escalate tensions and can potentially have serious geopolitical ramifications. The interception of missiles by a U.S. Navy warship could strain relationships between the countries involved, trigger military responses, and heighten instability in the region. While it's difficult to predict the exact outcome of these things, such an event is generally considered to be a serious and concerning development. So again, we still have geopolitical tensions causing some pain in the overall markets, but that wasn't the only thing. Of course, that's something on the back of our minds, but what else did we get today that was huge? So on top of me, warning the Push and Profit private, or alerting them of that news, I also warned them that, hey, today we were having Jerome Powell speak. In fact, let's go ahead and show you guys. We had Jerome Powell speak at 12 p.m. And let me just say, guys, a bit concerning, because he did say that things are looking good and things they don't have to hike as much, but he kind of reiterated the fact that they will have to hike one more time by the end of the year. And take a look at this. This is insane. So now the future markets are pricing in a 97.90% chance that the Feds are going to hike in their next meeting. Now, this is completely crazy just because yesterday we saw this at, I believe it was like 6%. So for it to jump from 6% to 97.9% is insane. Now, I've been saying that I think it's very unlikely that the Feds will hike for their November 1st meeting. And I said that I'm more on the idea that they may hike for their December meeting. But now, with the rhetoric that we just got from Jerome Powell, things are a little bit at just uncertainty. And I worded that completely wrong, but I'm honestly lost for words just to see how quickly the future markets changed after hearing the rhetoric from Jerome Powell. And so that's why we didn't just see Tesla stock fall down, because oftentimes, many people say, okay, Tesla falls down, that makes the overall market fall down. No. Right? The overall S&P 500 has a whole bunch of other companies that have a weighting on it. For example, Apple, is one of the biggest contributors to, or it has one of the highest weightings on these, indexes. And so, of course, there's a lot of other stocks that influence this. And so we saw the overall markets fall down as there's geopolitical tensions as well as hawkish rhetorics coming from the Federal Reserve. Now it's kind of switching things over, and so that's something that we want to pay attention to. Now let's go ahead and hop back to Tesla stock. Now we did see some easing towards the end of the day. There was some good news. We did see that now Toyota and Lexus joined the Tesla supercharging network, and I mean at this point it's pretty much every single car. I honestly can't even name another. I'm sure there's like one or two out there, but I can't even name another one that hasn't joined the Tesla supercharging network. So this is positive for Tesla, but this is something that isn't going to have a huge influence on its stock. It's just something that in the long term is good. We know that service and or I believe on the income statement it was labeled as other services and revenue, something along those lines. And we're seeing that that's most likely going to continue going upwards, which is good because we know that in 2025, 2026, all the way going forward, we're going to see that most likely go up as more other vehicles are going to contribute to Tesla actually making money from their charging stations, right? And so that's pretty interesting, some good news for Tesla, but I'm not going to be one of those Tesla perma bulls that says, okay, well, everything's good now, because of course, we're still not in a good area. We have geopolitical tensions. Tesla stock fundamentally is not looking good right now. Technicals are looking scary. And then we have hawkish rhetoric from Jerome Powell. And so on yesterday's video, I said that a lot of the bulls, the real long-term bulls for Tesla, they're actually not too concerned. They're still bullish that Tesla's going to do well in the long term. And they're actually salivating at Tesla falling down, looking for Tesla to actually fill this gap right around over here at this low one or mid 160 to 180 area. I mean, just look at the comments of my previous video. Everyone's pretty much waiting to load up, because everyone that is a long-term bull for Tesla knows, yeah, right now things don't look good, but in the long term things are going to look much more better. And this is something I've said. I mean, if you guys have been part of the Push and Profit private group, or even publicly watching my videos on YouTube, you don't necessarily have to join the Push and Profit private group, but if you've been watching my videos on YouTube, you know that I've said this from the beginning of the year, that the beginning of 2023 was going to be a year where we saw a lot of optimism, a lot of things pushing upwards, but going into the third and fourth quarter, that's where things are going to look a bit scary and a bit concerning, as things are not looking good economically. We just got the leading economic index today, and it capitulated downwards for the 18th month in a row consecutively. That's kind of online saying that a recession is likely to happen, but we're having a strong labor market that's holding things up. And so, yeah, third quarter not looking good, fourth quarter even looking worse, right? And so definitely we're, pretty bearish right now in the short term. Doesn't mean I'm bearish in the long term. I really hate this. I think one of my biggest pet peeves is that when I talk about Tesla stock going down, I always get someone saying, oh, your puts are going to burn in hell and you're going to lose all your money. Trust me, the internet's wild, but I have thick skin, so I'm not too concerned. But I just want to reiterate, I'm just bearish on Tesla in the short term. doesn't mean I'm bearish on Tesla forever. I don't know why every time I say this, I think I always trigger someone, but you know, I can't be one of those perma bulls that only says Tesla stock is gonna go upwards forever. I think you have to stay away from individuals that are perma bulls or perma bears, right? Because again, the market's much more dynamic than we tend to give it credit for, and it's gonna have a lot of fluidity and a lot of movements depending on what's currently going on. And right now, things are not looking good. Again, I'm not looking to buy just yet in my long-term portfolio for myself. Again, you don't want to copy what I do or any fund manager. You only want to invest or trade in whatever you seek value in. So whatever trade I call out, you shouldn't copy only if you see value. And whatever long-term investment move I do, you shouldn't copy unless you see value. And so right now, I'm going to be watching this area right over here around that mid 200 or like 213 area. Do we crack below it? Because if we do, yeah, it's going to get a bit painful for Tesla, right? But with that said, let me know in the comment section below what you guys think for Tesla going in the long term and or in the short term if you obviously trade, because as you guys know, I trade and I also have a separate long-term investing account. And before you guys go, make sure to watch this next video right over here where I talk about how I dissect options flow, and I'll see you guys on that next video.